Good morning, everybody. It's currently Saturday, 17th of July, 7:39 in the morning. The week has ended. As always, Saturday, we're going to do our backtesting session to get out of our comfort zone and start to actually execute. My comfort zone is doing the analysis. Now we are going to try to learn how to execute. It's currently start of the London session of Tuesday, 18th of September 2012. And as always, we're going to do our mainly London session to see what trades we can take if there's an opportunity to take any trade. So yesterday we saw in the previous video a not so good Monday. So this was all the prior day. We got okay at 7. We started at 7 here and we ranged all day. So it was not easy to take any trades. We were waiting for any action between the key levels or below this order block. That was very visible on the hourly time frame. We wanted to get safer sells below the order block created or above this order block. These impulsive candles happen only later on after the end of our of my session, so I couldn't trade that. It was following our analysis because we were identifying a bearish trend, but we were waiting for this impulsive action to happen, which happened only later on during the day. This was market open during Asia. We got a pullback to previous lows. Looks like we made a double bottom. Huge week on the 5 minutes time frame, and now pre-London we got this bounce back. So we start with our analysis already from the 5 minutes. We can see that what we need to see is either price goes as a strength to break and go to retest this key level, or break and retest, and even further retest the bottom of the order block. Now we're going to see it on the hourly time frame, or we see a break below these lows. So let's see. Today we are not having any news, relevant news. We have later in the afternoon FOMC, the Federal Open Market Committee members speaking. Of course, we don't have the headlines, but since it is late in the day, we are not so concerned for our session. So let's see on the hourly time frame. As you can see, the first hour made a huge, the last hour made a huge lower week, sort of bouncing from the 1751 key level, and then going here retesting the previous one. So as you can see here on the, if we see the market structure, we got an impulsive moves due to the NFP. We failed to break above these levels, and we ranged, pretty much ranged for the last 4 days, more or less. What is this? Yeah, 5 days. For the last week, we ranged between these levels. And we got an impulsive action yesterday night after our whole session. It was like at 6 p.m. GMT, so 8 p.m. Central Time. Then, yes, should be. And okay, what are we looking for now? As you can see, we go on the daily time frame, we see what is the current trend. So now we are in a bullish short-term bullish trend. So as you can see, price is printing lower lows, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So that's the definition of uptrend. And so we're now in a phase of correction. As long as price doesn't break below these previous highs, we cannot say that price is in a bearish trend yet. We have to be, as we were pointing out, we have to be really mindful of the price sensitivity area on the left, which we sign here with the horizontal line, because that might be a huge make or break price point, as you can see, has been it was actually very important, and I should also put another one here. Okay, so we can have it. Okay, so as I was saying, we're going to look for now for reactions. We are looking on a daily on the correction, seeing that unless price breaks below this level, there's no real reason to call it a shift in market structure, but it's just only a correction, a pullback. So as I said, we can expect a pullback, a deeper pullback to the previous highs, which are here, this level, which we can mark as well. Okay. Okay. So, if I have to state an analysis, we're going to say, of course, we can have buy scalps above this level, which is in a 45 pips range to retest and revisit the previous highs. We can also say have a range 70/80 pips range to retest the low of the order block, or we can have a bounce and a high risk high reward sells from the key level if we fail to break above, for price to continue down is correction phase, which is still valid even if it gets if it is just a pullback, even if reaches these levels. Okay, so we're starting now. Let's go on the 1 minute, since we are already very close to the key level. We want to see the action here. So remember, we are looking at high risk high reward already here, and also high risk high reward sells could be at the previous. We have to be mindful here, can be a place of rejection, because this is the last high that brought to this last low. So we can have rejection. If it goes further, then we can consider buying scalps only. But also have in mind that the trend, currently the intraday trend is, we are playing the correction. So, no, actually no. The real trend is bullish. This correction, we never know where it is going to end, where it's going to finish. So it's not smart to play it as a full in-trend trade. So what we are mainly looking for is buys. But let's see if we see some rejection and some. Okay, let's start. We're on a 5 minute now. We're looking at a reaction here. Let's see now if prices is able to make higher lows and higher highs. We see a reaction. Remember, we are in London now. And at the opposite, we are seeing the sells playing out for already 40 pips. We see reaction at the key level. Not so easy to enter, actually. And as I said, you don't know where it will finish. Since it's a counter trend correction, you don't know if it will go to the key level or not. Let's see now if the price is able to fully correct, or now it's going to re-break below to continue bearish. I'm using the key levels based on capital angry concept as a reference to enter if we see rejection here. So for me, looking here is not that clear of a entry. Is not the rejection that I was looking for. And that's why I'm not seeing a possible entry. And it's something that I might have to look out for and work on. As you can see, this is not a rejection that you can see. You say, okay, now it dropped to the key level. Let's stop. Okay, now we are at the key level. We got the typical London pullback. Now price is continuing up. So the hourly time frame, the hourly candle should be okay, and up a week bearish. Made a lower week, and it's now against the key level. Let's see how the first half an hour we don't have, but the first 30-minute candle is pretty much this one. So we want to see continuation up. So now we can have a break and retest, look for it, and continuation up. Or we can see the reaction and rejection at the key level, as we were saying. Now price is reacting at the key level, but is retesting also the previous lows. It's not going below the previous lows on the left. The previous high, sorry, on the left. Okay, failure to close below. Now it's reacting at these highs, as you can see. Of course, now buys will need some good impulsive bullish candles like these ones. Let me zoom in. Okay, we want some closure, strong closure above these previous highs and the body candles body. We are still below the key level, which might start to give us a hint of, okay, be careful, be ready to adapt to low cells, since we are failing to break above. But we have to stick to one bias, I think, which is bias until we see some change, some bias extortion, which might be here. But if I want to enter cells, I want to see a fuck you candle, last try to get above, and then failing to enter cells. If I want to enter cells. You see, they are not so strong. One bullish candle engulfed all. Let's see if now this can bring some juice. We already see not even getting to the key level. I would like to see it, to see a retouch more or less at the key level, and then getting rejected. This might looks like it. Now we are printing pretty good bearish candles. Let's see if we see price dropping below this level, we might consider entering cells with like 12 pips of stop loss. Or wait with for the real fuck you candle. Don't forget to see what is price doing. Here, you see, you connect these two, and you see the reaction and the bullish. So that is also might also be the case that we just need some more liquidity grab to continue up. Let's go. I'll close the hourly candle. Close bullish, but not breaking these highs. Made a lower wick already, so it's good to continue up. Now, of course, for buys, we want above here. And the sellers, we want now to see a break of the structure. Okay. We're now approaching the trend line. Here, let me just fix it for these candles. Okay. But it looks like I know. Okay, now it looks like there's a little bit more volume, more bearish momentum. Remember that if it doesn't break these lows, Is it even broken the bullish structure? No. So let's see. For now, it looks like buyers, sellers are in control. You see how many bearish compared to the few bullish. But let's see the reaction in this price sensitivity area. Of course, in insight, even if it's really slow, we got a reaction and failure to break above. Some ranging, failing to even retest the key level. Now maybe I'm biased, but was already this candle a possible entry to give us 20 pips? Who knows? Yeah, looks like for us, in this moment, the move was this one. And I missed it. And no. Okay. And this was the move as per analysis that I wasn't able to catch. Now price is ranging. Remember that we have the FOMC later on during the day. This was the analysis. And that's it. So we almost have New York Open in here. Okay, so we are at London Open. We saw price pulling back and now retesting the key level again, giving us a reaction. We don't know yet. This is why trading is hard. We can't say that price changed the bias because, as you can see, you can put it here. Here it's still in a bullish trend, and you can't deny it. Has been ranging and against the key level and against these lows, more or less. So now it's reacting. We already reacted. Now it's New York Open. Let's see where it pushes. It should push in the same direction of the London trend. So bullish. So I'm expecting a break and retest to further continue up. It's fine if it is making the lower wick. The hourly time frame. New York kicking in. The lower wick was made. Let's see if now New York wants to push the price down. Okay, looks like we got the double bottom. And I want to take, of course, buys above this level. Okay, here. If I enter here, we have 15 pips. I will give you 215 4 45. So 1 2 3. Let me go slow and not entering yet. Why? Look at where we are. We are closing at the previous highs. I want to enter if I see confirmation of a close above. See how price is reacting over there. Okay, this is a strong closure indeed. I'm going to wait for a retest to continue the up. Okay, let's see. Okay, I want to enter over there. Now this one was too fast. I want to enter here. Let me go slow. Okay. I want to enter when I see the candle going below and then starting back up. I want to enter buys. Target is at the key level. Let's see now what it does. Okay, we are now okay, trades 15 pips above. What I want to see is I want to modify the stop loss to bring it down here, which brings to 7.8 pips. And I want to close some partials, like 50%. And let the rest run. We're seeing a pullback. Okay, I want to see bullish closures. That's good. That's good. I'm not looking for, I don't want any re-entry at my key level. So I want to place it at break even. Close another 50%. 70%, which leaves me with a runner for the last oh shit, okay, I closed everything. It's fine because we got our 17 pips. I didn't want, let's do it again. So it's fine, doesn't care. No, I can do it like this. Very good. I want to close it partially. I want to break even and close 0.4. Okay, close. And leaving the rest run risk free. So now we are not worried anymore. We just want to see price getting to our target. Okay. Be really mindful here of this reaction. I will actually consider it done and trade completed. Actually no, let me bring up the trade. I would trail the stop loss. There's no reason for me to, I want this, okay, 22 pips below this level. If it goes, it goes. I can just place also the oh my god. Okay. Target profit here. And I leave it run. I don't really care much. Target hit. This was the first target. Now you see we are breaking above. We trail the stop. We got stopped out. This was a nice retest. No problem. Now price is reacting. So we don't care. I personally don't care anymore about this day. I'm adding off the charts. So I entered here, took partials here. Maybe this was a mistake because I took out 0.4 of my lot here with no reasons. I could have waited here and take, of course, take partials here at least because there was clean action. So I'm going to see how much I left on the table, but I'm really happy because I actually managed to get a winning trade, and I was really, my idea was really good. Not my idea, my analysis was really good, and I okay, perfect. And this will be the thumbnail. So we're going to close this. So if we go and watch the trades, we can see history. I just want to see the one of today. So we got 14 pips, 20 pips, and 41 pips. So we got 0.5 at 14 pips for 72. So we got, let me do some calculation. So okay, it's let's do it row. So it's 153, 194, 194. So if I take instead as here